Ladies and gentlemen, welcome to today's video. Today we will be talking about cognitive biases, which are very crucial in your trading. And you need to understand it because when you're playing in high stakes environments like trading, you're making split-second decisions most of the time. And if you do not understand what biases are, what types they are, how to fight against them, how to understand them, it's gonna be a big problem in your success, right? So before I begin explaining the whole thing, and just to let you know, if you stay in this video for the next 5 minutes, I believe you're gonna learn something new. And if you don't learn anything new, you don't find it useful, fine, you lost 5 minutes, right? But if these things help you in your success in your trading, it's gonna be a long-term positive influence that I have left on you. So feel free to leave a question in the comments, like, if you have not subscribed, subscribe to the video. And just to let you know, in the bio of this video, there is a link to a free Discord, free Telegram, also a link to a BitGet event. Right now, BitGet is airdropping free money. The terms and conditions about the airdrops, it's free money, I'm telling you. Just go down in the bio, check the link, and you'll see the terms and conditions about the thing. Now, before we lose any more time, let's dive into the subject. So, let's start by understanding what we mean by cognitive bias. So essentially, in essence, cognitive biases are mental shortcuts or patterns that can change our perception and affect the decision making. Pretty much this is the way that the brain simplifies complex information. This is a shortcut. Okay, so cognitive bias can be a big problem because they influence the choices we make, because maybe the bias will make whatever choices we're taking, make that choice feel logical, but it's actually influenced by a subconscious because of emotional factors. And as I said at the beginning of the video, when you're playing in high stakes environment, even the smallest distortion in judgment can lead to significant losses, right? And you have to be very careful with that. So here's an example with biased question. So an unbiased question, do you like ice cream? And a biased one is chocolate ice cream is the best flavor, right? You can see the difference. Now, the reason why biases matter is the following. So in short, because they can directly impact your performance and profit potential. Biases shape how we interpret information, assess the risk, and making the quick decisions. Imagine you're considering whether to enter a trade or not. A cognitive bias will make you ignore certain red flags or overestimate the potential gains, and these biases can lead to impulsive decisions like entering trades too early or keeping a losing position open longer than you should. In fact, many of the most common mistakes we see in trading come from these biases, right? So you have short-term versus long-term conflicts. Pretty much what that means is biases also create conflict between the short-term impulses and the long-term goals. And you have to be very careful with that as well. Now in this picture, what you see is a low bias and a high bias, and a low variance and a high variance. So if you have a high bias about something and you have a high variance as well, this is essentially the misses you make, right? So the best place to be in your trading is when you have a low variance in your strategy and you have a low bias towards the outcome, right? This is the best place. If you have high variance and very high bias, this is the accuracy of your decisions. That's very simplified visualization. So overall, biases, to summarize the information from this slide, biases create conflict between the short-term impulses and the long-term goals, and the short-term emotional response might push you to react quickly to the market noise which is created, while your long-term strategy requires patience and careful analysis, and these biases can pull you off the course, okay? And this is gonna lead to less consistent results over time. Now, to explain that thing again, on the right, you will see the visual comparisons of how biases influence the outcomes of your trades. Now, on the next slide, it's about the common cognitive biases. So There are many types of cognitive biases, but here in this video I'll be focusing on 4. Sorry. There we go. Lost that screen for a second. Now, the biases which I'm gonna be speaking about today is the confirmation, loss aversion, and overconfidence, and anchoring bias. Each of these ones can lead to mistakes, and we need to understand them. Now, the confirmation one, first let's talk about the confirmation bias. So this is the tendency to focus only on information that supports our existing belief or trade ideas, while ignoring anything that goes in conflict with them. For an example, a trader might pay only attention to news or analysis that confirms the trade that they have already got into, rather than considering the available data objectively. And the risk here is that you end up reinforcing your own beliefs and overlooking critical signals that could protect you from losses. Loss aversion. Loss aversion, this is the bias that causes us to fear losses more than we value the gains. This is why traders often hold positions onto losing positions longer than they should, hoping the market will turn in their favor. And this behavior can turn a small manageable loss into a large one. Essentially, the loss aversion clouds the judgment and makes us cut losses difficult. The overconfidence bias, the name speaks for itself, pretty much taking much larger risk than necessary. And finally, the anchoring one, it occurs where traders rely too heavily on initial information such as specific price or target and make decisions based on it, even if new information suggests otherwise. For instance, a trader can anchor a target price they set for an asset and then they refuse to adjust it. Now, about confirmation bias, I'm gonna go a bit more in depth. So this is the tendency to seek out information that supports the idea that you're already in. So let's say you're in a long position and you keep looking for evidence to support your long positions and you ignore the red flags. This is the confirmation bias. The loss aversion pretty much is the tendency to fear the losses more than we value the equivalent gains. This means psychologically, $100 feels worse than the pleasure we get from the gaining 100. So if you lose 100, you'll be devastated, okay? But if you gain 100, it's not gonna matter much. So this type of loss aversion means that you're fearing the losses much more than you're having pleasure from the gain. And the danger of this bias is that it makes it difficult to cut losses, which can turn a small loss into a much bigger one. And in trading, you should learn to let go of positions. And the overconfidence, the name speaks for itself. Essentially, if you take a much bigger risk than you can. If you think, let's say this guy on the picture, that's why I got this picture over here. So this guy with a motorbike, he thinks he can just like jump from this end all the way at the end. That's his visualization, but in reality, that's not the way it works. And the anchoring bias is just sticking to the initial information. So in trading, the anchoring bias might lead a trader to fixate on an initial price target. So let's say back in 2021, 2022, the bull market in Bitcoin, 2021, people were talking about targets of 100, 120, but essentially the top was pretty visible at 65, 64, even 58. And most of the people, they did not adjust the target. They will stick to previous bias. So that's why many people got trapped, It's very important to be flexible with any targets you have. Now, how to recognize and manage the biases. Now that we have identified the most common ones, the next step is to recognize them in your trading and taking action to manage them. And the first key to managing biases is awareness. So you need to be aware of them and regularly checking in with yourself, asking questions like, am I ignoring certain information? Am I holding a losing trade out of fear? It can help you to stay objective. And another useful tool would be journaling, like just record each trade and note any emotions or mental shortcuts you can spot in terms of patterns. And finally, it's all about the discipline, you know, sticking to your strategy and just reviewing your decisions. That's as simple as said as possible. Now this is a cheat sheet which I have found. Shout out to Buster. He has a Twitter account which I have found, and this is a picture from him. You can pause, you can read it. This thing can help you out. Now, in terms of conclusion, as we wrap it up, I want to tell you it's very important to master the mindset in trading. Now, the most successful traders are not just skilled with numbers, they're also incredibly self-aware. Now, trading is a game where you need to be a master of yourself. Now, it's not only about analysis and just like having a good strategy, but a big part in your success in trading is gonna come in your mentality about it, right? Being self-aware, knowing yourself. And trading is not just about reading the charts, as I'm saying, it's a mental game. And it requires constant improvement. And by committing to understand, you know, our own mental habits, we become better equipped. And just having a simple routine can help you, at least with 50-60% improvement in my opinion. And just finally remember that learn to manage the bias. Learning to managing that bias, it's not something that you do only once, it's a continuous journey, right? The market is always evolving, and the strategies as well, and the mindset itself. So every single time that you have the opportunity to learn and refine, just do it. And the closing statement about the whole learning for today would be, with awareness, discipline, and commitment to improvement, you can make cognitive biases work for you, not against you. Now, thank you all. Thank you for watching this video. If you like it, feel free to leave a like, comment, and thank you for coming here today. Wish you all the best.